Hey guys, welcome back to the Crypto Corner, your crypto connection. Today I want to reel back the tape just a little bit, and tape. That really dates me, doesn't it? That's kind of funny. I was actually thinking about that the other day. You remember Be Kind, Rewind? You remember, guys? Any of you guys remember that? Hopefully you guys remember that. I was thinking about that. Be Kind, Rewind is like, oh man, that's, I don't know if half the people that are watching this even know what that is, but that's kind of funny. Anyway, back on topic here. Let's roll back the learning back here a little bit, and I want to talk about something that might be extremely basic for a lot of you out there. But there are a lot of people out there that I try to remember when I first started in learning how to read charts. That there are a lot of people that are just kind of getting into this, and they may not even be in the crypto world. They might be just trading stocks or whatever. So this might be something completely foreign to them, and I want to try to touch on some basics because I have some friends who I've here recently have been showing them charts, and when I show them charts and show them different things that I'm finding in the charts, the look on their face is like they have no idea what I'm showing them, and it seems extremely foreign to them. And you'd think I'm trying to teach them how to learn a foreign language. So what I want to do is show some chart basics. So maybe that would help them along with anybody else out there that is just learning this, right? So here's what I want to do. So I am currently on the Bitcoin chart. It doesn't matter what chart you're on. It's all the same. The charts read the same no matter what you're on. There just happens to be more volatility in cryptos than in most other charts. So what we're looking at here, we're looking at the Bitcoin 4-hour. We could go to the day. It's all the same. But let's just stay on the 4-hour for illustration purposes. So what we're looking at here is we're looking at three different windows. Oh, let me back up. What I like to use to read charts on is TradingView. There are a few different sites that are out there, Coinigy, a few others that you can look at price action. Okay, this is all called price action. I prefer TradingView. It just seems like it's the cleanest, it's the easiest to work with. To me, everybody has a personal preference. So anyway, I like TradingView. It's free. You can sign up, and with the free membership, you can have, I think, up to 3 indicators. Each one of these is called an indicator. Okay, the volume is a free one. You get that no matter what. So you can have 3 indicators plus volume. Okay, so, and I actually only have 2 right now. You'll see your indicators pop up here, or they'll pop up below here with what indicator you're using. Okay, so this top, I guess you could call window. What this is the bulk. This is the meat and potatoes of a chart. Shows your price action and all of your candles. Again, guys, it's going to be very basic for a lot of you, so just either skip through this video if you understand this stuff already, or just watch it as a review. And I tell you what, why don't we do this? I'm no master by any means. I don't know everything on this. So if you guys out there who know how to read charts, if I'm not explaining something correctly, or maybe I'm explaining it incorrectly, by all means leave it in the comments below, and let's all learn together here. So let me know if I'm missing something, or maybe could be explaining it differently. But anyway, let's look at this. So each one of these candles, these bars, these sticks here, these are called candles. Okay, so each candle is represented by whatever time frame you're on. Okay, so like right now, I'm not sure if you guys can see up here. I think I actually have my recording software to crop most of this stuff out. But anyway, if you're on TradingView, you can see the chart that you're in, which is right above my crosshair here. And then right to the right of it shows different time frames. There's like 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, so on. So I'm on 4H, which is 4 hours. So what that basically means is each one of these candles here is 4 hours worth of price action. Okay, so if you look directly below, down right, it goes away once I get off this chart, but you can see you see this white crosshair. If I go right below there, it shows me the time that I'm looking at. So currently this candle shows that it's February 8th, 2019 at 11 a.m. Okay, if I move over one candle, it goes to 1500, which is 3 p.m. That's military time. Okay, so it's every candle is 4 hours worth of action. Does that make sense? So you can see in this candle here, we had this up here. See this OHLC? That's open, high, low, close. So what that means is when this candle started, when the time switched, when this 4 hours was up and it switched to this new candle, the candle opened at $34.51.57. That's $3,451.57. That's what it opened at. The high for this candle, it got up to $3,711. That was the highest this candle ever went. The lowest this candle ever went was $3,440.35. And then when this candle closed and would jump to the next candle, it was $3,634.99. Does that make sense? So you can see that's what this candle shows. So the bulk of this candle is represented by this green area. These other areas above here are called wicks. So that shows, my computer is really laggy today for some reason. These little areas right here and like right here, these are called wicks. And what that means is that price action went there, but it didn't hold that area. Okay, so it's one of those things to where you need to look at wicks because it shows that, I guess you could, for layman's terms, price explored that area, but there wasn't enough interest in that area to hold that area. This area here was an area of interest. I guess you could call it like that. So that was the area where there was more buyers and sellers in that range than there was in this range. However, there was a little bit of price action there. I hope I'm explaining this right. So like I said, we're on the 4 hour, so that's a 4 hour candle. So respectively, if I go to, like, let's say a 15-minute, and let's rewind it a little bit. If you, over here on the side is price action right here. If the candles get so scrunched up you can barely read them, all you need to do is click and drag, and that will expand your chart. It'll open those candles up a little bit so you can read them. So once again, like let's take this candle right here for instance. Now we are on a 15-minute chart, which means 15-minute candles. You can see that we had an OHLC 38.90 was the open, 39.25, 38.90, 39.25. And right next to this, it shows you whatever candle you're on, it shows you what that candle did in that time frame that you're looking at. So for instance, this candle here had a growth, because it's green, we've had more buying than selling, of $34.43 during this candle. Okay, and also converts it to a percent for you. Okay, so when you see all those numbers pop up, that's what that is. A lot of people, I mean, you can use those. I don't really use those a whole lot, but I guess it's important to understand what they are. So that's what that is. Now below, so each one of these candles represents what type of price action you had. So on this candle, we had more buying than selling, which would be reflective of a candle that's rising higher, and plus it's green, which means there's more buying than selling. Conversely, over here, there was more selling than buying, which is why the price action is falling, and it's red. Now, what you can also do to kind of confirm what you're seeing here is you can drop down here, and this is your volume. Okay, this is how much money is coming or going from the particular asset that you're looking at. Okay, be it Bitcoin or gold, silver, whatever the case may be, right? So you can see this candle here had a spike in volume, and it's red, so that means that there was more selling than there was buying. Okay, same with here. This candle here had a big it shot up in price quite a bit, and it was also somewhat confirmed by a large green candle in volume, which means that there was more money coming in to Bitcoin at this point on this particular exchange, which this one's the Coinbase chart. So that's one thing you got to watch is when you see huge spikes in price, you want to confirm that with big green volume candles. And conversely, with this red selling, if you see a huge red price action candle, confirm that with a huge red volume. It doesn't have to be huge, but in other words, if you saw a very large red candle, price action candle, and you saw hardly any volume, that's kind of concerning. You would definitely want to investigate that further to figure out, okay, if I'm having a drop of 15, 20%, even 10%, and there's no volume, that's kind of fishy. So you typically want to confirm, that's what step one is, you want to confirm whatever price action you're looking at with volume to somewhat match what you're seeing, okay? So you can see here, in this area here, we didn't really range too much in price, about $30 or $40. This volume kind of represents that there's really not a lot of spike in action. But you can see here, volume started picking up, which was represented by price action going down and price action going up. Okay. Now, one thing to look at when you're looking at your different time frames. A lot of people say, well, how do you know if, let's say you're on the 4-hour chart. You're on the 4-hour chart. How do you know how much time is left in this candle before it goes to the next candle? Well, all you have to need to do is look over here to the right below the price, the current price. This blue line, this blue number here, that is the current price right now, okay? Right below that, that is your countdown timer for the candle that you're on. So once that goes to 0, boom, a new candle will form. And I don't know if I can go to, like, let's say a 1 minute. Let's explore this. So we can see right now we are on a 1 minute chart and our countdown timer is at 8 seconds. So theoretically, I've never watched this before, but theoretically in a few seconds we'll see a new candle form. Let's see what happens here. So a new candle has started, and there's our candle right there. It just popped up. You see it right there. So we should probably start seeing some more action in this candle. You can kind of see it starting to form there. It's getting a little bit of buying in the 1 minute. Okay, so that's what that is, and the timer starts over. Now, once you go to, I believe it's the daily. Yeah, the daily, there is no countdown timer. And I don't recall, maybe you guys can help me out in the comments below. I don't recall what time that the new candle starts on a daily chart. If you guys can help me out with comments below, I should look that up. I guess I need to know that. So anyway, back to the charts. So if you want to add an indicator on TradingView, again, I think this is cropped out in my recording software. So right above where my crosshairs is, there's something that's called indicators. You can click on that and you can pull up a bunch of different indicators, okay? So a very common one is RSI. I use the RSI. So you just find relative strength index, that's what that is, and you click on it. Now it's already on my chart, so I'm not going to click on it again. So you would just click on it and add to your chart. If you want to add the MACD, M-A-C-D, it'll pop up right here, MACD. There's several that you can pick from and choose from. The important thing is just try to learn how to use the indicator. There's a lot of garbage indicators that are out there that, don't really, it more confuses you than anything. So I'm not real big on adding a ton of indicators to a chart. I kind of prefer to kind of look at them naked, so to speak, which basically means there's not a whole lot on here. Even this chart is kind of, I don't really care for a lot. Typically, when I look at a chart, I usually don't have the MACD on. I'll pull it on here to look at confirming what I'm seeing, but usually I'll take everything off, and I might have the RSI, but that's about it. Some of these guys, they put fib wedges and all kinds of craziness on here. I think it does nothing but just kind of confuse people. So the next window we're going to look at is called the RSI. This is the relative strength in this index, and the RSI, let me pop over here. So the RSI, I'm going to read this to you guys. The relative strength index developed by J. Willis Wilder is a momentum oscillator that measures the speed and change of price movements. The RSI oscillates between 0 and 100. Traditionally, the RSI is considered overbought when above 70 and oversold when below 30. Signals can be generated by looking for divergences and failure swings. RSI can also be used to identify the great general trend. So what this, to put it in easy to understand terms, this just shows momentum. Okay, this like you guys ever watch like a football game or basketball game or whatever, and you can tell when you're watching the game, you can kind of feel momentum shifting from one team or another. Maybe during a basketball game, maybe one team is starting to make a lot of their shots and the other team is not making a lot of their shots, and the crowd is getting behind the other team, and you can feel that kind of momentum following that particular team. Consider this an indicator that kind of represents that. So this shows, obviously, the lower the RSI, the lower the momentum. The higher the RSI, the higher the momentum. Okay, so I guess that's kind of a good analogy. Is consider it just a momentum swing indicator. Okay, now most RSIs, I have these blue lines set to blue, and you can just change that. These little buttons right here, this little format, you can click on this, and you can change whatever color you want to change your colors to. I like mine to be blue with my RSI line to be white. It's just personal preference. But you see these blue lines here. This is the 70 and 30 line that this was referring to. And the 30 line and 70 line, you want to see price action kind of stay between these lines, because it's in this line. How can I explain this? So in this line, between these lines, I guess the momentum is more in the normal range, I guess I could say. So once you see momentum get way down below this 30 line, that means that like down here it's way oversold. Okay, which means that momentum is extremely low, and it needs to fight to get back up into the normal range. Okay, I've seen some traders, some traders, and I don't know how successful they are, but I've seen some traders, they will trade off the RSI. So what they'll do is, and they typically do this on the higher time frames, maybe 4 hour, I can't remember now. I watched a couple videos on YouTube on guys that trade on the RSI. So what they'll do is they'll enter positions when the RSI is extremely oversold. And what they'll do is they'll hold their positions until the RSI gets high, like maybe here. So, I don't know how successful they are, but let's just take this example right here. We're on the daily chart. So the RSI got really low around this area right here, which would have got you into the market around maybe this mark here. So 38.73, and the price action would have brought you up into the first oversold condition, 3,900. Not that great, I guess. I mean, but whatever. I mean, everybody's different. Everybody has their own strategies. I don't really care for that strategy. I think this is a good way to kind of potential swings in the market. Okay, so when you see price get up here above the 70 line, what that means is it's overbought. So it means, okay, guys, we've been on a tear here. We need to get back down here because it's too hot. Okay, it's something. It's there's so much buying going on that it's how do I explain this? It's almost like it's so overbought that it's kind of above the norm. Okay, so we need to get that indicator back down below, in between here. Okay, I don't know if that makes sense. I'm probably not explaining that correctly. Again, leave some comments below if you guys can explain that oversold and overbought a little bit better. But I guess bottom line is what you like to see is momentum to be in here. So let's take an example. Let's take exactly where we're at actually. Bitcoin on the daily chart. This is February 22nd. So Bitcoin right now is currently just starting to get over right to that 70 line. And how you can tell that is it depends on where your mouse is, where your cursor is. But like right now, if you look right here, this number right here will tell you exactly where it's at. Now, when I'm moving my cursor, it'll move. But if I move it all the way here, it shows the latest part. You can see right below there, it says 70.08. And what did I say? Over 70 is considered overbought. So a lot of traders will look at that and like, okay, we are just entering overbought territory. There's not as much room to move up. There's not enough room for momentum to go up to be able to buy to make price go higher. So now conversely, if let's say this RSI indicator was down in this area right here, like it was when we had this last pump, people may look at that and be like, okay, well, we just had a huge pump. We are still at 51 on the RSI, so there's still plenty of upside to go in this market to be able to get some decent momentum without people freaking out and getting worried as they are right here. I hope that makes sense. So a good place to maybe get into some, if some indicators are lining up that it's showing that price may start to swing, like let's say like right here, for instance, price is starting to kind of come up. You're getting some price action moving up and you're seeing the RSI, the momentum's kind of starting to show an upside, and you're way down at the bottom towards the 30 mark, then you have all kinds of room to go up in momentum. So I hope I'm explaining the RSI halfway decently. Makes sense in my mind, but you know, I'm kind of a weird dude. So anyway, the next indicator that I like to use sometimes is called the MACD. And what is the MACD? So the MACD, the moving average convergence divergence indicator, is a momentum oscillator primarily used to trade trends. Although it is an oscillator, it is not typically used to identify overbought or oversold conditions. It appears on the charts as two lines which oscillate without boundaries. The crossover of the two lines give trading signals similar to a two moving average system. Okay, so what does that mean? So the two lines here, you have a MACD line and you have a signal line. And again, you can change the colors to whatever you want to do. Okay, so I have my MACD line set as this like pinkish red color. My signal line is the yellow line. Okay, so in theory, here's what I like to use my MACD for. Okay, so my MACD, I like to help show divergences in price action. Okay, and what? Let me show you an example. So if we go back in, let me see if I can just find an easy one to show you for reference. Let's go to the 4-hour chart. My computer is really super laggy today, so I apologize if it seems like it's really laggy on here. Now let's go back to the day. Okay, here's a decent one right here. Okay, and again, they're all over the place, but I'm trying to find one that's super easy to see and understand. So on your MACD, zoom in just a little bit right there. Where did it go here? Okay, here it is. Okay, so on the MACD, I don't know why my computer is so laggy today. It's really kind of messing with me. Excuse me. So let's look right here. This is a good example of divergence that could represent what this ended up being, which was distribution. I'll say this for another video. So there's two phases of market cycle, okay, trend cycles. There's accumulation and distribution. So basically accumulation, and I'll go into this further but on another video, but this is where people kind of load up their pockets, and distribution is where they sell it off and make their profits. So this right here is distribution, okay? And how you can tell that is if you look at price action, it's rising higher, right? Well, the MACD is showing otherwise. It is showing, where's my arrow here? So the MACD, you can see, is heading down. It's in a downward slope, whereas price action is heading higher. Okay, so when you see two opposing indicators, price action showing different than the MACD, that's a bearish diversion. So that's showing that this MACD is not lining up with what you're seeing in price action. Okay, so that's one indication that something is about to happen, which actually ended up happening right here, whereas price fell as it ended its distribution phase. Okay, again, I'm probably not explaining that the best, but there's a lot of ways you can use the MACD. That honestly is probably one of the best ways or best applications that I use the MACD for, is to show some divergence. Okay, you can get into the signal line crossing the zero and the MACD, being above the MACD, and all that. You can use that. It's very helpful, but that's, to me, is probably the best application for the MACD, and that's why I don't use it a ton, but I'll put it on the chart if I'm seeing price action going higher and it doesn't. I'm not sure if it's real price action or if it's just maybe possibly distribution. So I'll pop it on there and look at that. And typically you'll see the divergences in a little bit smaller time frames. If you see, let's talk about time frames a little bit. So when you're looking at time frames, and maybe I should have touched on this in the very beginning of the video, but when you're looking at time frames and you're trying to evaluate what's going on in a particular trend, you want to try to never ever, the cardinal sin in chart reading is losing sight of the macro trend, which is the big trend. This is the big trend here. So you can see that right now I'm on the daily chart, which means daily candles, and I'm looking from all the way from October of 2017, all the way to today. So I'm looking at way over a year's worth of data here. You never want to lose sight of what's going on, okay? And a classic example, I see so many people get so zoomed, and I did the exact same thing when I got started, until I had to break myself of it, is if let's say you get into like the 15-minute chart, right? And you never zoom off of that chart. You may see this and think, oh my God, it's going. We are in a massive uptrend here. We've bottomed out and we're going higher. or even, you know, the 1 hour chart. Let's look at the 1 hour. Oh my gosh, guys, look at this. I mean, it's amazing. You know, we are definitely, we've hit bottom. We're making higher highs, and this is it, guys. This is what we needed until you zoom out and look at the macro view. Okay, you have to zoom out and look at the macro view. And in Bitcoin's case, you can see, okay, well, this is what we were zoomed in and we looked at, and it looked really good on the 1 hour chart until you zoom out and you think, oh, well, I guess technically we are right here. We're still making lower high after lower high after lower high after lower high after lower high. Okay, so that's why it's super important, and I'm not going to get into the technicals of Bitcoin right now. It's not what this video is about. But never ever lose sight of what is going on big picture. Never ever. Me personally, I don't like going below the daily. I'll go to the 4 hour sometimes just to kind of view what's going on a closer time frame, just to kind of help confirm what I'm seeing on the daily. But if you zoom in closer than the 4 hour, unless you're like a professional trader, you can get caught with your pants down, and you can get in big trouble. Okay, so I like to keep my view on the day, the 4 hour, and I don't like to go much more than that, because what I have found, and what I had to pry myself away from, is when I was using like the 15-minute and the 30-minute. I noticed that I became a lot more emotional when I was on the closer time frames, and a great illustration is this right here. You know, you see a spike like this, especially if you're really zoomed in on your price. You know, you see this, and it'll freak you out. It's, you know, that's a big move. If you're zoomed in that far, you know, you think, oh man, here we go. It's up, it's up a 3%. Well, in the big picture, it's such a small move. It's not worth getting yourself, unless you're a scalper, or a professional. Guys, don't do this. Don't. It's not worth it. You will stress yourself out. Zoom out. Look at the bigger picture. Look at the higher time frames. And you'll be a lot happier in the long run. Trust me on this. If you're concerned about price, you can set alerts. That's one thing you can do in TradingView. So you can like right click on an area in your chart. You can put add alert. So the TradingView will alert you if something is happening. So let's say you want to, and that's another thing, is you don't want to be glued to your computer. I mean, unless you are a professional scalper and you do this for a living. But if you're just doing this on the side for a little bit of side cash, if you want to walk away, you can, say, well, if price ever gets here, I want to add an alert. So you can add an alert there. It'll pop up. It'll ask you, what do you want? Okay, Bitcoin USD crossing the value of $4,025. You can have it alert you every time or just this one time. It'll ask you for, it'll pop up on here. I believe if you do an email, you have to have the subscription, I believe. So, yeah, so you can do that, and that way you don't have to be glued to this, to the computer. Okay. Anyway, I'm not sure how long this video has been. I've lost track of time here, and I hope this kind of helps with a little bit of chart reading. If I had more time, maybe I'll do another video on some basics of like different tools you can use for your charts, like Fibonacci levels, how to use those, different tools you can use on TradingView, like how to measure moves and so forth. There's a lot of things that you can learn that will help you in determining how to place your trades. So maybe I'll get into that in another video, but I figured, right now in Bitcoin, we're kind of consolidating out. This is kind of a critical area. Again, I'm not going to get into the technicals of Bitcoin, but we are at a critical area of Bitcoin that's going to show what's going to happen. But the one thing that is good when we're in an area like this where we're not doing much of anything right now is to kind of review the basics and, maybe brush up on some things. So, one thing that we talked about is, making higher highs, right? So we're kind of making some higher highs right now. I mean, some people would argue we're going sideways, but what are we talking about, guys, on the MACD? Why is this not working on here? I tell you, I think my computer is possessed today. So I think you guys know what I'm trying to get at here. So, so keep that in mind for possibly what's going on with Bitcoin. We talked about this just a little while ago. So be careful here, guys. I hope this helps with some beginning chart reading. And if you guys like this video, would like to see something different in some future videos, please leave it in the comments below. Hit that like button. Hit the subscribe button. I'm trying to grow this channel, and if you guys like the content, I'll keep pumping these videos out as quickly as I possibly can. So again, hit the thumbs up, the like button, the subscribe button, and leave me a comment below and let me know if I'm not explaining this. Maybe somebody else in the comments can explain the overbought and oversold a little bit better than I just did. So with that, I will see you guys in the next video.